Welcome to Markets Now. I'm Michelle Rook along with Ted Seifried with Zaner Hedge. We're seeing mixed trade today in grain and livestock futures. On the livestock side, we have cattle lower today, hogs higher, and over in the grains, feed grains are higher, soybeans lower, but at least off of their session lows. And let's talk about soybeans first of all, Ted, because the pressure that we've seen really is just Brazil and that monster record crop that's coming at us, right?
Yeah, big crop in Brazil. We just saw Conab up their numbers a little bit, although it's not terribly far off of what the trade has been talking about. So that's not a shocker, but when you see it on paper, that does have an effect. Also, talk of Brazilian beans on their way to the East Coast. We have confirmation of a ship of 30,000 metric tons getting loaded for delivery late this month. That puts some pressure on the market, not necessarily because of 30,000 metric tons. I mean, look, the USDA has 15 million bushels of imports on their balance sheet. So that's definitely a small part of that. And I think it's accounted for. But the concern is there going to be more of that? And the concept of why, right? Because, Brazil values
they're so much cheaper, right?
So much cheaper. Yes, like $2.40 under. So it really begs the question, one, are we going to see more of that coming into the U.S.? But also, for our export sales, while we've been hanging on and we haven't seen these big negative numbers yet, not that there's a lot of outstanding sales to see big negative numbers, but we're still seeing export sales on a weekly basis. But you got to wonder how much longer that's going to occur when you've got Brazil so much cheaper than we are right now.
Yeah. All right. Speaking of exports, we got more China business this morning, 15 million bushels with old and new crop both in there. But the bull spreads are back working in the corn here today. I know we took a little bit of profit on that spread yesterday, but how much farther will we push that, especially as we go into option expiration and we've got first notice date coming up and whatnot?
Yeah. So that's a great question, Michelle. I think there's further to go. And part of that's because we've seen a change in the narrative for new crop, right? I mean, go back 10 days ago, we were thinking, wow, some of these states, North Dakota, South Dakota, big part of Minnesota, we're just never going to get corn planted this year because of, the 3 feet of snowpack that we have sitting on the ground. And the longer term forecast does not look good and so on and so forth. But then, forecast gets better. And we do start to see that melt off. And now we're thinking, okay, we're going to get this crop in. The corn's going to go in. Okay, we're a lot better off than we were even a week ago, at least in our mindset for planting. So that's put some pressure on the new crop. And then in the meantime, like you said, old crop, there's tightness in basis. Go back to that quarterly grain stocks report that we saw a few weeks ago. Stocks were down year over year in both corn and beans. But where the stocks were down was primarily in the hands of the commercial, right? So that commercial has a job to do to get those commercials have a job to do to get that get those corn and beans out of the hands of producers. And so that's strength and basis, and strength and basis usually manifests itself on the board in the form of strength in old crop and strength in those spreads. So, I think for the time being there is more upside potential unless we see export sales fall to nothing. And with the export sales that we saw from China, 2 days in a row, it really makes the market wonder if we're going to see another round of like we had seen a couple of weeks ago, where China and unknown destinations bought 11 out of 12 straight trade days. Wow. Could that be happening again?
Do you think it is?
So. No. Unfortunately, Michelle, I don't think so. For one, we're not starting off with the big numbers that we did that time around. It's about half of what we did, about half of what they did these last 2 days compared to the first 2 days of that 11 out of 12 days trip. Secondly, Brazilian President Lula is over in China right now, really trying to increase or better their relations. Not that they don't have good relations already. But generally speaking, when the Chinese visit somewhere or have somebody visit them, that's when they make ceremonial purchases and things like that. I get the feeling they're going to buy a lot of Brazilian corn in this visit that Lula has to China. And so that's going to be the second season corn crop, right? So China needs to cover their needs between now and July, right? So I get the feeling that they're probably getting close to that. I mean, you don't know. Nobody knows with China. But I'd be a little surprised if we see that amount again and that amount of time again where we see sales every day. Again, I think they're just tying up loose ends to get themselves to the end of that second season Brazil crop.
Yeah, they're getting pretty cozy, those two, that's for sure. What about the wheat market? We're finally up here today. We do have some cold weather coming in. So is it that or some changes in the narrative here on this Russian grain deal?
Yeah, I think it's a bit both, right? Certainly with the pushback, go from warm temperatures back to cold temperatures, that's not ideal, right? So that does have us sort of in a little bit of short covering mode happening. But then also, while it is a very old story about Russia potentially pulling out of the export corridor, the language they're using the last couple of days, and really today in particular, is a bit different than what we've heard in the past. Because Russia's now pretty much saying we're pretty sure this grain corridor is going to end on May 18th because we don't feel like our demands are going to get met. And those demands are, one, they want the sanctions dropped on their grain exports, but more importantly, they want sanctions dropped on their fertilizer exports. And they don't see that. They don't think that's going to happen. And if it doesn't, they say they're going to be out. So the market's a little bit concerned about that. But honestly, Michelle, I wonder if there's an opportunity for us to maybe ease some of the sanctions on Russia, specifically on the fert, because that could actually benefit us too. And we could say, hey, look, this is us being a good actor to allow that grain corridor to continue. So I think that could be a win-win situation. I'd hope that we would at least consider that idea. So I don't know. We'll have to see what happens there. Okay. And then the question really is, if we don't, how does Russia react the day after that grain corridor ends? Does that mean military action? Are they going to attack ports again? Are they going to attack vessels again? If they attack vessels or ports or anything, if they do something from a military perspective, well, your insurance companies aren't going to want to have anything to do with any of that. So that would effectively shut down the grain corridor. So, you don't want to think about what happens if we get to that point. But it's not good, right? No. We know that it wouldn't be good.
Yeah, there was a lot of suspicion. They only wanted 60 days because of what you just said. All right, the cattle market, new record highs this week in the cash trade, some record highs here in the futures. Seeing a setback today, is this healthy profit taking and hedge pressure, or are we seeing any topping action yet?
Yes. So, one, you had gotten very overbought in cattle. So we needed to see some sort of correction, maybe a little bit of a pullback. We saw that start on Friday after a new high. It wasn't a key reversal because we didn't get below the previous day's low. Sure. But then we kind of followed through with that to start the day on Friday. Again, overbought condition. We needed a technical correction. But honestly, I think the bigger thing is that, with cash cattle Wednesday trading 180, 181, like you said, new record highs. I think some people are feeling like the cash market could cool down just a little bit after reaching those new highs. It's sort of like a back and fill, like you would talk about with the futures market.
Right.
So maybe in anticipation of cash cooling off $1 or $2, nothing dramatic. But I think the futures maybe got ahead of that. Now, I don't think that should be a lasting thing for futures or really cash for that matter, because look at the June trading at a $15, $16 discount to where cash is trading right now. Right. So unless cash cattle really cools off, I think there's still more upside potential in the cattle market. We're going to have these profit taking or overbought correcting sort of moves occasionally, once in a while. But to me, it looks like a really well-defined bull market that's in the middle. It's in its middle ages. It's not seeing this crazy like blow off top volatility, things like that you would expect to see at the end of a bull run. It doesn't feel like we're there yet, Michelle. And I don't think the cash is done either. Domestic demand is really very good. Let's not talk about that 87,000 in weekly export business. But it's never really been export business that's been driving the cattle market. It's been that domestic demand, strong box beef prices, i.e. translating into strong cash cattle prices, and knowing that we just don't have as many animals out there going through at least the third quarter of this year. So the bullish fundamentals are there from both the supply and demand side, domestic demand side. Again, yes, maybe the market feels like there could be a cooling off here for a time frame, but I don't think this story's over.
No, I'm with you on that, especially because the futures are at such a discount here. What about the hogs? Just quick on that. Is that short covering? Are we unwinding spreads with cattle? After contract lows yesterday, we're certainly oversold.
Yeah, certainly oversold. Hogs are the wheat market of the livestock.
I would
um,
agree.
yeah. So I would say there is some that I mean that spread between cattle and hogs that rubber band is stretched so tight. So yes, I do think that you are seeing a little bit of correction in that. But also for the most part, like you said, very oversold. I think fundamentally, I just like wheat, I can bring up some rather bullish points. I think for hogs, but until the chart respects that, I don't know if it's worth really going through it.
Good
And
point.
that's the problem. The hogs continue to make new lows. And yes, while we did find some strength on Friday, it's just an inside trading day. It's a market that just can't pick itself up off the bottom and continues to sort of break down. I don't know what it's going to take, Michelle. At this point, I'm looking more out to the deferred contracts because up front we know we have more supply up front, but that starts to thin out as we get into the fall and into the winter. So I'm looking at December maybe as being a good value down here. But as far as the June hogs, I don't know.
Yeah.
I'd like to see something happen on a chart to make me feel warm and fuzzy about my bullish thoughts that I have. And until that happens, I kind of have
Yeah.
to step away.
Yeah, we haven't gotten cash or cut out really to bottom in earnest. So until we do, this is where we are. All right. Thanks, Ted. Ted Seifried joining us with Zaner Hedge with Markets Now.